All right, here's a fun one. Let's overlay this general idea of the anatomy of a bubble on top of our projection. This is Brian Lewis with MMT Investing, and things have changed. So, looks like we just switched into a bear market. Looking at the size of this credit drawdown, like here's what a 3 month credit contraction looks like during the bull market. It's a draw, bounce, bounce here, and here's what it looks like during a bear market: is drawdown, bounce, bounce. So you can see the drawdowns and the bounces are a little bit more dramatic when you get on the bear side of the equation. Um, so I'm sure most of you have seen this anatomy of a bubble chart, and I just wanted to draw some little points here to show you where I think we are in this bubble as far as human sentiment goes. This is like a human sentiment chart. So this is like the smart money that gets in down here. And then we have our 10-year bull market here. So here's the sentiment anatomy of a bubble, kind of markers in my own words. So you start getting attention about the bull market, and then people start getting in, and it's fun. And then everyone starts getting in, and they start getting greedy because everyone thinks they can make endless money just going long on stocks. And then you get to this point where the financials are just super volatile and they're going nuts and everything's crazy, nothing makes sense, and everyone is just piling in, and you get this crazy drive up to our cray reversal blow off top here. So we got our blow off top, and now we've got just our first leg down in this credit contraction. Um, So I've seen some people mention this anatomy of a bubble thing, and they're trying to put like the tags like here, like on the first like thing before the dead cat bounce, and like down here's capitulation, and we're gonna reverse out of here. No, that's not what's going on. Okay, here's what's happening. This entire 3 month credit cycle drawdown is our denial drawdown, blow off top. This whole thing that we're doing right now is the denial phase, and this 3 month bounce that we get back on the credit expansion after this drawdown happens is going to be the okay again, return to normal phase over here. And then this bear market is going to be that fear, capitulation, sell off, and then uh, the despair phase down here. It's over forever, forget it, I never invest in stocks again. And then, of course, that's exactly when it starts off on the next bull market. And this is the real bottom, but it's kind of tricky because things are changing right now. Like all of the market fundamentals that everyone has on this whole bull market just completely flipped on its head. And now we have to figure out how to invest through this crash, which is nuts, and then how to invest through a whole bear market. What's going to be good? Um, Looking at commodities, looking at real estate, looking at precious metals, just switching like which stocks you think will be good and not good in the bear market. Like we'll have the same types of credit cycles that we had on the way up. I mean, we'll have like these expansion run-ups, and we'll have these contraction drawdowns, and we'll have these, growth up and down, all kinds of bumps on the way down, but they look different on the way down. It doesn't look the same on the way up. So if you look at the last bubble we had here, um, we didn't get the same kind of blow off top on the housing bubble because this bubble wasn't part of the stock market. So the stock market didn't get the crazy shape of the bubble. I don't have a housing chart right here. And this chart won't go back far enough to the dot-com. The S&P doesn't go back far enough. The dot-com's back here. The dot-com bubble would probably be an example. But yeah. Yeah, this situation that we're in right here, like we're not getting like return to normal here in the middle of this credit drawdown. This is just the bull trap here. And we're going to get a drawdown, and then we're going to get an expansion period and a return to normal over here. That's like, this is 3-4 months out when people are like, okay, things are fine again. And they're not fine again. From what I can see, I'm projecting that we get this bull trap that we're in. This is a 1 month drawdown, a 1 month bull trap and a bounce down, and then another 1 month bull trap and a bounce down. That's a 3-month credit contraction, and that's what a credit contraction looks like on a bear market. And this is a reversal into a bear market right on a contraction. So this is quite a thing. This is a major blow off top, and it's crazy. But we're going to get an expansion, but this is not going to be a bull market expansion where it just like grinds out to the upside for the whole like 3-month period. This is a bear market expansion bouncing off of this low. So I just guess it bounces and kind of goes flat. That's probably what it does. I'm not sure. We'll have to see when we get in here what's going on, if this model still holds up. And yeah, here's the timeline of the anatomy of a bubble. And we are just at the top of the bubble in the denial phase. Everybody's still trying to get back in. Everyone's still excited about stocks. No, that's not what it sounds like when you get to a bottom. Like, people are going to start freaking out here, and then down here everyone is going to be just going nuts and selling, and just that is a bottom on a contraction cycle, and it's going to pull down, and then you have the really slow, long grind down bear market, and once again people will be giving up here. So that is the anatomy of the everything bubble. This is not trading advice. Please hit the like button to help me out with the YouTube algorithm. And happy trading, and be safe, and good sentiments and stuff. And try not to do these sentiments, because these are how you lose money. Don't do these. Look in here and see what's going on and play the market trends. All right. Wait. Don't listen to anything I say. This is not advice.